Hi, this is James Shug at Westpac London with the end of day report for Monday, July the 2nd. Very positive sentiment in European equity markets today, some of it following on from the strong rally in US markets on Friday night, but also because of some less weak factory PMI surveys in China, an upward revision to the June figures for Euroland and a less negative UK reading. Also, ongoing, I think, positive sentiment related to the EU leaders summit, although there has been some nibbling away at the edges there with some of the northern parliaments questioning whether the leaders' commitments can actually be delivered by the governments, and others pointing out that the fine detail makes it less achievable. Things like the ESM's direct bailout of the Spanish banks rather than via the Spanish sovereign. Notwithstanding those quibbles, as I say, European markets are higher. We've got there a gain on the FTSE of about 1.3%. That's with banks like Barclays up following the resignation of their chairman, but other banks, I won't name them, down because of the alleged or apparent or reported sacking of 12 traders in relation to the LIBOR price fixing, which was revealed last week. In other European markets, we've got the French market up 1.4%, the Germans are up 1.2%, the Spanish and Italian markets up less, though, just a third of a percent and a quarter of a percent, respectively. In the US, it's a different story. The Dow had the big rally on a Friday night. It's now down 53 points, or 0.4%. Main reason for that, I think, is the ISM factory survey, which came in at 49.7. That's down from 53.5, and its first sub-50 reading, which implies a small degree of contraction since the recession in mid-2009. So the weakest reading there in quite a while, with orders in particular absolutely slumping, something like 14 big figures. Orders down 12 figures, 12 big figures. That was disappointing. However, construction spending numbers were solid in both May, up 0.9%, and an upward revision to the April rise. The first back-to-back rises actually after two declines in the previous 2 months. So more evidence there that the construction side of the US economy, or the housing side of the US economy, might be bottoming out, doing a little bit better after a long period of stagnation or even decline, even as the economic recovery has been proceeding of sorts elsewhere in the economy. I think I mentioned we had another cycle high for Euroland unemployment, 11.1% there. So I mentioned the US markets. In terms of the commodity markets, today we've got copper prices down 0.8%. We've got oil down 2.5%, and copper, I mentioned 0.8%, and gold down 0.2% at $1,600 an ounce exactly. And the Aussie dollar is at above 1.02 against the US dollar, but having risen quite sharply at the end of last week as the risk appetite returned following the EU leaders summit. It's kind of just hanging in there at the moment. Okay, Reserve Bank board decision tomorrow, or today Sydney time if you're watching down there. We're looking for no change in policy at this stage, but 3 more rate cuts later this year. Okay, back tomorrow. And apologies for not being around the last few days. Commitments elsewhere happen sometimes.